If you have a 401k, you own Google. And while the headlines are cheering their latest stock run, there are 10 facts buried in their Q1 2026 SEC filing you need to understand about your money. Fact number 1, the top-line truth. Let's look at the raw health of the business. In Q1 2026, Alphabet brought in $109.8 billion in revenue, up 22% from last year. Net income skyrocketed to $62.5 billion, and operating margins expanded to 36%. On the surface, it's a flawless quarter. Fact number 2, where the money comes from. You need to know how this machine actually works. Out of that $109 billion, $60.4 billion comes from search. Google Cloud is now a $20 billion monster. YouTube ads brought in $9.8 billion, and subscriptions and devices added $12.3 billion. They are firing on all cylinders. But here is where the story shifts. Fact number 3, the $500 billion lock-in. Buried on page 12 of the 10Q is a $467.6 billion revenue backlog. This is contractually obligated future revenue, primarily from Google Cloud. Their backlog is now larger than their entire annual revenue. Fact number 4, the CapEx explosion. Securing that backlog comes at a massive cost. On page 9, Alphabet reports $35.6 billion in capital expenditures for a single quarter. That is a run rate of over $142 billion a year. They are spending like a heavy industrial manufacturer. Fact number 5, the buyback freeze. Because of that massive CapEx, page 30 reveals a major shift. After spending $15 billion on buybacks in Q1 of last year, Alphabet repurchased exactly 0 shares this quarter. They are hoarding cash for the AI arms race. To find these next few facts, I had to cross-reference the 2025 10K with the new 10Q. If you were at a Tier 1 firm and you paste these documents into a public AI like ChatGPT, you are leaking your firm's research alpha. I use TensorPilot to run these cross-document audits entirely locally on my own machine. Zero data retention, total privacy. If you manage capital, the link to the local AI framework I use is in the description. Fact number 6, the shadow debt. The local audit found this on page 21. Alphabet has signed $75.6 billion in data center leases that haven't even commenced yet. This is massive off-balance sheet leverage just to keep the AI lights on. Fact number 7, the depreciation disconnect. According to their 10K, Google depreciates its servers over 6 years, but AI accelerators are often obsolete in 3 to 4 years. If they are forced to adjust this schedule to match reality, it will take a multi-billion-dollar bite out of future margins. Fact number 8, the net income illusion. Remember that massive $62.5 billion net income we talked about in Fact 1? Look at page 44. $36.9 billion of that came from paper gains on their private equity investments. The headline EPS is artificially inflated by startup valuations. Fact number 9, the 48-hour spending spree. In March 2026, Google closed 2 acquisitions, Wiz for $29.5 billion and Intersect for $5.9 billion. They spent over $35 billion in cash in exactly 48 hours to secure their cloud and energy infrastructure. Fact number 10, the legal overhang. On page 24, Alphabet is carrying $15.5 billion in short-term accrued fines and settlements. This is cash that is already spoken for, primarily waiting to be wired to the European Commission for antitrust violations. 10 facts, straight from the filings. If you want to audit documents like this securely without leaking your data, check out TensorPilot below. See you in the next breakdown.